Hey guys, how are you? Can you hear me? Quick sound check. Great. Can you see the screen? Awesome. So we're live on YouTube. Let me see. Let me just confirm if we're live so we can start the class. If you guys have any questions, start dropping them in the chat right now. Okay, that's already there. Yep. Cool. Let me just put my phone on silent, and we're good to go. So I'm excited because this morning I started a brand new morning class, and some people here are crazy because they were in my morning class and now they're in my evening class. I don't know what's wrong with people anyway. All right, so welcome again, those of you that I saw this morning. And let's see who we got. Let's do a quick roll call. If you guys have no questions, I'm going to go straight forward. I see here Lena, Perla, Heather, Chad. By the way, Heather and Chad, this is the first time I have you on the screen side by side. Never happened. Always had one up here, the other one down here. So you guys decided to unite tonight. All right, we see Anthony, Steven, Jane. Jane, you feeling better? Okay. Well, day by day, we'll get there. Linda, I see you. Gary. Gary entered this morning like 5 minutes and then, nope, I'm out. Let me enjoy the day. Sarah, completely nuts. She was there the whole time. Nicole, Sandra, Joe, Gil, what's up? Vanessa was there as well. Perla was there as well. Peter, what's up? Mina, Youssef, Angel, what's up, man? Sabrina's there. Brian. Who else we got? I have Daphne, but I don't see Daphne. Still joining. Daphne says she's having problems signing in. Well, I see her logging in. Let's try that. Perla said Nicole's mom is here too. That's what she said. Monica, what's up? Hey, where's my ice cream? I was so hope. Actually, no, because the next day I wasn't able to do class. I think it was the ice cream. That's what it was. All right, let's see. Crystal is joining. Oh, Pedro says, well, I fired your mom. I didn't fire you. Pedro says he will accept the ice cream. All right. Crystal says, I'm still eating dinner, so wait for me. Like, don't teach until I'm done. All right. So, let's see. Vanessa, you had a question? That was you? Hold on. Question about chapter 14. Hey, Talia. Talia's here. All right. Geraldine's joining. We are on page 240. But I'm still waiting on figuring out what the question is on chapter 14, mortgages. Okay, so Geraldine got in, Talia got in. Daphne's still not able to join. Hey, Steven, where's your dad? Morning and evening was too much for him? He was here in the morning. Vanessa has a question. Let me go to, okay. So Vanessa has a question. As a buyer, how can we avoid negative amortization? Okay. So here's the thing. You only get negative amortization if you have an adjustable rate mortgage or if you fall behind on your mortgage payments, even on a fixed mortgage. Negative amortization simply means you're not paying enough into the premium, let's say, right? So you think about premium, right? So it's a principal and interest. You're not paying enough to cover, to amortize the loan. So Negative amortization happens on adjustable rate mortgages because the rates go up and down, right? So you might be paying less than what's needed to amortize for the full 30 years. You got it? So they dump whatever that loss is for the bank, they dump into the principal, and that's why it increases. That's negative amortization. But you don't have that, what do you call it? You don't have that negative amortization just because. Let's put it like that. All right? Perla says, I usually have Carlos and Steven side by side. Yep. Well, not me. I always have everybody scrambled all over for some reason. All right. So, sorry, somebody was asking to access. Is Daphne here yet or no? No. All right, so we're going to move forward, and hopefully she'll be able to join. Oh, hold on. Have another. Okay. So while Vanessa is typing, I'm going to bribe you guys. Ready? I'm going to give you guys, Gary's like, oh. I'm going to give you guys, even though I'm not going to do evening classes, so it's not an official class, I'm going to give you guys a couple more days because of these delays that I've had. But there's a bribe. Hold on. There's an exchange. Ready? Because Linda was like, yay. All right, there's an exchange. I ask you guys one favor. There's always a carrot, absolutely. One favor. That favor involves a lot of stuff, but it's one favor. I want you guys to subscribe and review to the best of your opinion. Whether it's good or bad, I just want the most honest review about what your experience is here with the school. All right? And also subscribe to my YouTube channel, okay? For several reasons. Before you guys do it, I got somebody saying they can't sing. Who can't sing? Pedro, if you're listening to this, can you please address whoever cannot sing right now? Thank you. So why am I asking to subscribe to the, you can review, by the way, Google, so search Google the school. If you came here through a Groupon, please go to Groupon and review us there. You can go on Facebook and review. Whatever you guys can find, New Directions School, just do it. I know Heather. I know you subscribe. Here's the thing. I'm gonna have brand new videos that I'm gonna be preparing over this break that I'm gonna take. Brand new videos, small videos, just in the YouTube channel. So for you to get alerts on these new videos as they upload, you have to be subscribed. Okay. Thank you so much. Appreciate it. Everywhere. This definitely, thank you so much. Oh, and I saw some of you did post on Facebook recommending the classes. I really, really appreciate that. Not only for the referral, but the fact that you guys trust us enough to refer to us. Thank you so much. All right. Gil did it as well, even with his big thumbs. The wording actually came out right when he posted on Facebook, so it was good. LinkedIn and Facebook. There you go. Thank you. Perla says, well, I was referred here by my cousins. Now, here's the thing. Let me talk about your cousin. Oh, no, let me not do that. Well, both of them just passed. All right, so Jessiel is just waiting for state. And Tidy, she just passed on Saturday. And I'm going to upload her credits today, and then she'll be able to schedule. So 2 out of 2 out of your cousins. That's great. Let's see no pressure for you, right? No pressure at all. Thanks, Gary. All right, I got Meredith right here. It was difficult to sign in today. I don't know. I'm even putting, right now, guys, I'm even putting the link already with password encrypted. So click and join. I don't know what's happening. So sorry. You guys going to have your whole family working? Is that it? All right, so we got Meredith here is kind of related through Ria. Got it. Cool. I was just talking to Ria earlier today too. All right. So I could have a whole Zoom class just for you guys, apparently, for your family. All right. So you guys ready? I think we did the roll call. Oh, I see Carlos is here. Natalie is here. Okay, new sign-ins. Hold on. Who else? Janessa is here. Crystal done eating. Perfect. She's still slurping something. All right, and Daphne, I don't know what's going on. All right, again, whoever can help, well, not whoever. If you guys can address WhatsApp so I can move forward here, I really appreciate whoever can. And yes, Heather, that's what I said to Perla earlier. I said that the baby in a year from now is going to be helping her do the sales. He was typing before and everything. And yesterday he started sitting, right? Isn't that what you said this morning? So he's almost ready. All right, so here's what we got. It's we're going to finish chapter 17, and then we're going to do chapter 18, and that is it. Tomorrow we'll do 19 and 20. Then we're going to do 21, which is by itself. It's a very long chapter, which is closings. Then we're going to do math. Math is by itself as well. Friday, so I'm just going to give you a heads up based on these delays. It was not your fault. It was totally my fault. So Friday, we're going to do part A, which is exam prep A, right? And it's up to 110 questions, just so you guys have a feel of how the exam actually goes. And then instead of doing, which would be on Friday, exam prep B, I'm still going to give you guys Monday to have that, all right? And then worst case scenario, depending on how we go, worst case scenario, I'll just delay or give another shot at the school exam the following week instead of August 6th and 7th. So we'll see how it goes. I really want to have you guys ready for the exam versus just forcing you right there and then. So if this week is not enough for us to complete, I'll go 1 or 2 days over, okay? So the only core chapters are 22 chapters, so Friday and Monday as of right now, it's not mandatory. Just letting you guys know it's not mandatory, the exam prep. It's not mandatory. I do recommend, because I go over a lot of questions, sample questions for the state exam and school exam, and how you should think when you read those questions, how to break down the questions. And that's why I think it's important. Mandatory? No. Important? I think so. All right, guys? So giving you that extra day. So let's go over this and boom. Mina, are we going to have them to review? Yeah, it's going to be on, it's not in the student portal, I know, but it is on the YouTube channel. All the reviews are there, the exam prep. So if you search exam prep, it should be there. Okay? Or if you search 110 questions or exam preparation A, it should be there. There's a bunch of them, okay? Okay. No problem. Well, we're gonna make this happen, man. This third time's a charm, eh? Just saying. Gotta make this happen. The extra will be Monday. The extra day will be Monday. So what I'm saying is, instead of finishing Friday, it's not mandatory, but instead of finishing Friday, you can finish. I'll do an extra day on Monday just for you guys. Okay. So, oh yeah, Gil, they gave a stimulus to go back to work, right? Talia, the test right now, as of right now, is scheduled for Thursday and Friday. So I would split the class into two, and that's what we would do. For the Saturday exam would be 2 weeks after, but that depends on people that are doing that we'll be doing the evening class that started late because we didn't allow any other sign-ins after the first week. So you're not late, right? Then there's no Saturday exam. There will be a morning exam if anybody wants to try the morning exam after this one. There will be last week of August. Okay? Gotcha. All right. Yeah, no, that sucks. All right, we'll figure it out. Don't worry, Gil. I got you. All right, so let's go back to this. Here's what we got. We finished talking about depreciation. We went through this whole calculations here, right? Finished talking about depreciation. And then we're going to go into deductions and federal tax laws. And I told you that I needed your attention because this is complicated stuff right here. The good thing, guys, is that you don't have to know this. You just need to know a CPA that knows this, right? That's why I always recommend CPAs. Like, you don't have to know in detail, but you have to know enough to know that these things matter when somebody's buying or selling a home because it could affect their taxes, all right? It might happen that your CPA says, hey, don't buy any more this year, or don't sell anything this year, roll it to the next year, let's delay this, right? Sometimes those things happen. Why? Because it could affect the way you do your taxes, your tax returns, right? So here we go. Deductions and federal tax laws. Now, federal tax law limits the deductibility of losses from rental property. So that means how much you can deduct on those losses, right, when you do your taxes. Now, this is provided that the investor actively participates in the management and operation of the property, okay? Now, what does it mean to actively participate? If you guys remember, we talked on chapter 7, we talked about ownership of real estate. We talked about general partnerships. We talked about limited partnerships, LLCs, corps, and all that, right? So for you to be an active investor, that means you are the general partner. You guys remember that? The one that has a voice, the one that has a say in the activities of the business, the ones that it's there in the trenches, not the one that sits back and relax, right? Because the one that sits back and relax, those are called passive investors. Those are ones that are just collecting money out of their investment, like limited partners. You guys remember this? Say yes, even if you don't. All right. So in a limited partnership, people put up the money and shut up. They just put up the money, shut up, let the manager manage. So the general manager manages the business and gives returns to those that gave the money, right? So that's what we're talking about here. For you to be able to claim, like, oh my God, we lost all our money, we got sued, whatever, and we just lost in this property. For you to be able to claim the loss as a deduction, I'm going to show you something else later, but for you to claim the loss as a deduction, you must have been an active participant, okay? But only as a deduction against your active income, okay? So it goes against the taxable income, which is, for instance, your wages, okay? But if it's a passive loss, then it can only go against your passive income. So active income is offset by active losses. Passive income is offset by passive losses. So what we're saying here is if you're a limited partner, your passive losses will not reduce your liability on your active wages, for instance. That's why you need to have a CPA, or a best friend, as I always say. You need to have a CPA to figure out what's your particular situation. Like when you guys ask me, why do I have LLCs for everything, right? And I said, my way might be different, right, Peter? Remember that? So my way might be different than your way. My taxes will be handled in a different way than yours. So make sure you talk to your CPA, all right? Now, this is what I just explained. An investor may not use a loss from a passive activity to shelter active income, all right? May not use a loss from a passive activity to shelter active income. So if you make $100,000 a year, So if you make $100,000 a year, then your taxes, let's say, are $30,000. One example, right? That means you have to pay $30,000 to the government. But you had a loss of $20,000 in a particular property. Can you use the $30,000 loss to bring down the amount, like even $20,000 down to, $30,000 down to $10,000 because you had a $20,000 loss? No, you cannot. You'll be calculated at a different value, and maybe it offsets like $5,000, maybe. Does that make sense? So it's treated differently. It's not a one-for-one type of thing, passive to active income. All right? All right, I see Amelia just joined us. Another one from the clan, kind of. And Daphne, let me know on YouTube chat if you're watching. You just told me that you have an issue joining. Stephen, thank you so much. So Daphne, let me know in the YouTube chat that you're watching so I know that you're there, okay? Mina Fozzie is here too. Great. Catherine, I see you. Great. All right. Well, we got morning class joining the evening class. Andrea just joined. Cool. That's awesome. All right. Rudy is here too. That's cool. All right, guys. So what I was saying here is, again, got to remember this. Active losses, active income, passive losses, passive income. Now, tax credits. Now, this is different. This is great. I love tax credits. What are credits? As opposed to deductions, tax credits are a direct reduction. Okay, so deductions will be calculated in a different way, and it might really not offset much of your income, right? But credits, direct reduction on what you have. So a tax credit is therefore a far greater value than a deduction. Now, investors in older buildings, renovations, and low-income housing projects may use tax credits to offset tax of up to $25,000 of other income. So you have to pay $30,000. You might be able to reduce down to $5,000 because of this direct reduction. You got it? So even passive investors, if you guys see it, even passive investors can take advantage of tax credits. Great advantage here. Now, tax credits have been provided for taxpayers who renovate historic property. So there's a catch to this, obviously. Okay? Tax credits have been provided for taxpayers who renovate historic property. If you're renovating historic property or landmarks or anything like that, then you have an allowable 20% credit on the money that you spent on renovation. So if you spend $100,000, you have an immediate $20,000 credit or reduction on your taxes. Isn't that great? Okay. Sorry, guys. Just 1 second. Mr. Chovy, I didn't even know you were here. You are the man. Say hi to everybody.
Hi, everybody.
All right. Thank you so much.
No problem.
All right. So next thing we got. This is for historic property. Next thing we have is there's also a 10% rehab costs, credit on rehab costs for non-historic buildings. Non-historic buildings that were placed in service before 1936. All right, so this means they're old buildings. You renovate them, you get a credit of 10%. Now comes my personal favorite. You guys ready? The reason why my market is Newark and nowhere else. There's other places, but that's why I'm going to show you why I focus in Newark market right now. Ready? Because the tax law also allows us to get credits ranging from 4 to 9%. And you're probably thinking, wait a minute, well, historic is 20%, non-historic is 10%. This one is less, right? How is it my personal favorite? Because it's 4 to 9% each year over a 10-year period. What does that mean? That means that over 10 years, I could recover 40 to 90% of my investment. If Here comes Newark. If I'm doing new construction or renovation of certain low-income housing. Did you guys get it? All right. It's not just Newark. Low-income housing, find low-income housing, and some of them qualify, most of them qualify for these credits. So every time you buy, fix, and flip, right, for those of you that are in the flipping world, right, every time you buy, fix, and flip, you might get 40 to 90% credit over 10 years. You got it? Give me a thumbs up if you got it. All right. Nicole is completely distracted. Got it. All right, cool. Let's see. Perla, historic properties, they don't allow you to change. Yes, but you can renovate the exterior, go back to the original conditions. Oh, Perla's on the phone. Got it. So you can restore the property back to the original condition, and inside you can do whatever you want. There's still a cost to renovation. So can you recover the money? Yeah, absolutely. Chad? Yeah. See, a lot of people don't understand. Remember, guys, when I said you don't want to talk to a CPA and tell them how can you not pay taxes? You just want them to show you how to avoid paying excessive taxes. And this is what most people don't know. You're not taught this in school, unfortunately. At least not the regular public schools. You're not getting that, right? Definitely not. So you need to know this stuff. That's why you get into investment, is to get certain credits. If you're not taking advantage of this, you're losing a lot of money, okay? What happened, Yesenia? Yanessa, I'm sorry, what happened? You gave up? Or did I address it? I answered it? Cool. All right. Joe, do the homes have to be Section 8 or just be low income area? No, they don't have to be Section 8. They have to be low income area. Now, if you make it Section 8 or community revitalization type of projects, whew, there's way more credits, not even accounted here. You got it? So if you create a nonprofit, which is to revitalize the community and address low income and all that stuff, forget it. Okay? Credits are never ending. All right. The cool thing, I have somebody signing up for the class, for the morning class. This person did an inspection on, it's here from Newark, an inspector here from Newark, did an inspection on a property of mine 4 years ago. Just sent me a message on Facebook, says, hey, you probably don't remember me. I did an inspection, but I want to do the real estate classes, right? So this is like 4 years ago. And I said, hey, and I told her name and the property that she went to and all that stuff. She's like, she's like all happy that I remember her. So she's now signing up for the morning class. Fire inspector. All right, so smoke inspector, all this stuff. Anyway, small world. Listen, you can ask, Chad, you can ask some of the people here that are old students of mine. Never forget. People that I know from before, never forget. That's why I keep on addressing you guys. Do you notice that I'm always calling out on you guys and addressing your names and picking on little things? That's how I do to remember you guys later on. Because a 4-week class, 3 years from now, I don't know who you are if I don't play this game. Does that make sense? So that's something you guys need to learn. You always have to pick on a few things when you're talking to somebody, like the way they are, the mannerisms and stuff, and figure out something that will help you retain who that person is later on. Now, people change. Don't get me wrong. People change, right? That's right. But people change along the years, so it's possible. And now with the masks, it's even worse. I had somebody says, I recognize you from your eyes and your forehead. And I'm like, okay, I don't know if that's a good thing, right? But they recognize me. And I'm looking at the person, I'm like, take the mask just for a second, right? And then I knew who the person was. It's getting tough. It's getting tough. That's what it is. Oh, Daphne's here. Have no fear. Daphne is here. You were able to join. Great. All right, cool. So at this point, just later on, okay? Because we already started the class. All right, so you guys got this. You understood why? All right. What is the benefit of you guys knowing this as well? I'll tell you right now. Even though we've been in an investor's world for the past 10 years, 10, 15 years, right? We're getting into a new one. Investors are holding off on investing right now, right? A lot of them, they're not putting money out there. So it's good for you guys to know this stuff and advise them. You need to have something to connect with them so that you'll be the realtor for the investor. Does that make sense? Remember I said I was going to be your investor and buy any house that's green, right? You needed to get to a point with me where I said, yeah, I trust you enough to bring me those green houses and I'll buy anything. Just, whatever you tell me is good. So you need to create that relationship. How about showing something like this and saying, hey, you got money. There's areas that are up and coming, right? They are low income, got it. But they're up and coming and they give you great credits on your taxes. So you'll reduce the tax burden you have. You see what I'm saying? You go to these events, investors, meetings and all that, and you introduce yourself as a professional that knows this stuff, boom, instant rapport. And then people start trusting you and using you as a realtor for those transactions. You guys got it? Thumbs up? Great. Awesome. So that's why you need to know this stuff. Now, installment sales. We talked about this in chapter 11 when we talked about contracts. There's something called installment sales contract, also called land contracts, also called contract for deed. Contract for deed. And I told you guys that this was similar to a car financing. This is when you're getting paid in installments, but you only get the deed at the end, just like a car, right? Now, why is this under taxes? See, because it's installment sales, right? Because it's installment sales, did you get profit? That's how we ended last week. We talked about capital gains, right? Did you get capital gains if you have installment sales? Let me know in the chat. What do you guys think? Was there any capital gains if I'm selling with an installment sales contract or with a land contract? Geraldine, please affirm. Don't ask me, tell me. All right? Let me know your opinion. No, yeah, no, possibly. Depends if your mortgage is paid off. All right, there's 35 of you. Come on, give me your opinion. Let's see what you got. Roll it over, then die. Different concept here, but okay. No, yes, no. The fact that he said roll over and die, that's awesome. No, yes. Okay. All right. So the answer is no. There's no capital gains. You know why? Because you haven't sold the property yet. You're getting paid in installments, but the deed did not transfer, so there's no sale. There wasn't any sale yet, but you are earning every year. You're earning interest on that money, and you got to pay taxes on it. Do you guys understand? So what happens is all the monies that you're making from an installment sales contract is figured at the marginal tax rate. So if your tax bracket is 30%, let's say, then any money you receive every year from this type of contract, you pay at 30%. Sometimes it's better to just do the sale and get it over with. You pay capital gains 15% out of the total amount, right? The only advantage for this type of deal is that you're getting paid more because it's over several years with interest. So if you don't need the money right away, that's when you would jump into this type of deal as a seller. You got it? Because the money you're earning in interest offsets what you have to pay in taxes, right? And you get more money at the end of 30 years, for instance. Any questions? Drop them in the chat before I move forward. If anybody's watching from YouTube, drop it in the YouTube chat as well. I don't see question marks, so you guys understood everything I said. 100%, right? Vanessa's laughing. I could even tell that evil laugh that she was doing. All right. Nicole, are you there? You got that face like you're sad. Is it because your mom's still there next to you? Just kick her out. I told you this from day one. Vanessa says 100% nothing. I didn't get one thing you said. Do you have a question about it or no? Sarah just raised her hand. I know. I'm just messing with you. Nicole says, I've been tired. I've been doing college work and this every day. Need to catch up with sleep. Why? If you don't mind me asking, how old are you? I think we talked about this, right? 19? 3 hours is all you need. I mean, when I was your age, it was study, it was work, it was basketball, it was partying, non-stop. 4 hours, more than enough. Andrea says, I respect the grind because she's doing the same thing. All right, she's just started my morning class, and look what she's doing. She's right here. That's so cool. All right. Vanessa says, I don't know what I can ask. I didn't get, okay, cool. Oh, yeah, and you have to deal with your mom. So that's a big difference. All right. Carlos. Yeah, that's the Portuguese way. All you need is espressos. Look, here you go. Boom. All you need is espressos all day long, and you're good. Portuguese way. Look at that. All right. Daphne has a question on exchange. Okay, cool. What's your question on exchange before I move forward? Tea is okay. Question on exchange. So while Daphne's typing, I'm going to give you a heads up again on asking questions. All right. Here's the thing. I have some people, and this has been happening for 4 years, almost 5 years as I've been teaching this same course. And almost any course that I teach. When I started teaching the investment course, when I started teaching insurance, real estate, it's always the same problem. There's people that don't ask questions no matter what I say. They don't ask, they don't answer, right? When you get to the end, I'll tell you, it becomes very difficult. When you get to the end, you say, oh, I got this. I understood it in class. That's it. I don't need to ask any questions or mention anything. I'm good, right? When you get to the exam, things change a little bit, all right? So I'm just letting you know. If you don't ask questions, if you don't engage, then it becomes very difficult. All right? Let me see what's happening here. I'm not saying that asking questions is going to be the solution, but the fact that you're more engaged and that you don't have distractions next to you, you know? This was for Nicole again. Anyway, so Daphne, if you're not doing an exchange in property but want to sell your investment property, you still have to wait 6 months. Okay. Here's the thing. If you're not rolling over the gains you had on property A before you buy property B, if you're not rolling over, you're going to pay capital gains no matter what. Okay? So before 6 months or after 6 months, it does not matter. Now, if you roll over all the money that you made, you never touch it, it didn't go to your bank account, it stayed in escrow, stayed with another company. If you don't roll over that money, if you show that the intention is that that money goes straight into another property, then you don't pay capital gains. Okay, you don't pay right away. They're deferred, as you know. The exchange means there's no gains, immediate gains. So that's what it is. For how long, what? For how long it's deferred? Where are you? There you go. For how long it's deferred, that's your question? Until you sell the second property. So it's deferred indefinitely. Okay. She gave me the finger. It says wait. The Portuguese way is simple. Like the full hand. Like stop. She goes like wait. So Gil says if you sell a house for 500 and buy one for 150 and you put 100 down, how much you keep for liquid? Okay. So here's the thing. If you guys remember, let me show you again. If you guys remember, there's calculations for this, right? Right here. We went through this. So it's not you sold for 500, Gil, because the selling price is the selling price. We still have to address take the commission. We still have to take what was our original investment. Correct. So here is the profit. Capital gains are calculated based on the profit. What we're saying is you don't take this 54,000 right here. You don't take the 54,000 into your pocket. You roll it into the next property. Let's say this is your direct down payment towards the next property. That's what you're deferring. Okay? But if the next property is less, or this money is less than the money required for that next property, right? Then the difference is boot. The difference you have to pay taxes on. So if you don't use the full amount that you profited, if you don't use that full amount, roll it over to the next property, then you're going to be taxed on it. Okay? Got it, Gil? It's not how much you sell for, it's how much profit did you get. Daphne, how long can you, hold on, let me, boom. How long can you keep the money in the bank before finding the second property and not pay capital gains after selling the first? So that's what we have here. If you intend to do this, the exchange, Daphne, if you intend to do the exchange, then in the first 45 days of the sale of property A, or property number 1, within 45 days of that sale, you must identify the property you want to buy. You never touch the money. It stayed in escrow in a separate account with the title company, with the attorney that closed, whatever, right? And then you have 180 days to complete the purchase. So for the next 6 months from sale of property A until you complete the purchase, you're not touching that money. And because that money rolled over into the next property, did you touch the money? No. You guys got it? Anytime you cash out, so property A got sold, anytime you cash out, you pay taxes on the money that you cashed out. Same as your 401k, guys. 401ks, IRAs, you take money out, you're paying taxes on it. You might not pay penalties depending on what it is for, but you're always going to pay taxes for taking money out early. Okay? Any questions? I see Daphne's still typing. Talia's just running around. Geraldine just left the building. Catherine just ran away too. Oh, I see Susanna's there. All right, let's see. Peter, I see the top of your head. Yep. All right. So Nicole is asking, what is the penalty for a 41K? It's a 401K. But what's the penalty? It depends on your 401K plan. It depends. Every company has a different type of penalty when you withdraw money. But it could be as much as 10%. So it all depends on company you work with. Okay? And I'm not saying the company you work for, it's the investment company that your company works with. Because it's through them that you have the 401K. Well, that will be the withdrawal penalty plus taxes. Yes, will definitely be more than 10%. If it's a withdrawal plus taxes. Okay? And that's why you only match whatever they match. You don't put more money into a 401K, ever. If they match dollar for dollar up to $5, let's say, then you only put the $5. Don't put more money into a 401K because it's not your money. It's the company money, and you have a certificate to money in the company. If they make money, great. If they lose money, you lose it too, because it was not your money. All right? Next question was from Daphne. I mean, if you don't want to an exchange and you still roll over until you're ready to buy again. Okay. An exchange doesn't mean an exchange right now with Section 1031, Daphne. A Section 1031 exchange, before you had to exchange with like me, I exchanged with you. Okay? Section 1031 of the Internal Revenue Code allows you to sell one property and buy another right away without having to pay capital gains. At least not immediately. All right? So that's the exchange we're saying. You're exchanging the property you own for another property you own. It's not like you're exchanging with two different owners. Okay, that's one alternative, but very difficult to find. So they allow you through Section 1031 of the Internal Revenue Code, they allow you to switch properties, you being the owner of both, switch properties and defer the capital gains. If your intention is not to buy a property right away, then this doesn't apply. What I would do, if you don't intend to roll over to another property, what I would do is move into that property for 2 years, and that's your exemption right there. Owner occupied, it's your exemption to not pay taxes at all. You got it? Okay. So these are a few tricks you can learn along the way. Chad, that's a great sale point for starter home to set tartar. Oh, starter. Okay. So Chad, you're learning with Gil. Is that what it is? Gil, you're infecting people. All right. I'm sorry. What was the sale point for a starter home or a family home? I'm lost there. Let me know. Since I was addressing something else, I got lost there. Oh, the exchange? The exchange is for investment properties. It's not for your family home. Exchange only applies to investment properties. It could be a single family, but it only applies to investment properties, meaning non-owner occupied. Okay, for owner occupied, you have, if you guys remember Chapter 8, taxes, for owner occupied, you have exemptions of up to $250,000 on profit if you're single, or up to $500,000 on profit if you're married filing jointly. Okay? You guys good? Daphne's still typing a question? Okay. Nicole is asking a question. All right. Anybody else asking questions? Drop them now. Oh, some of you attempted the school exam, the practice exam. I did mention wait until you complete 90% of the course. So if you haven't completed 90% of the course, don't do the school exam yet. So wait until you do chapter 19 at least. Okay? We're almost there. It just becomes difficult if you don't have the full gamut. Okay? Let's see. Nicole, when you own a house for more than 10 years and you want to sell it, you have to pay taxes after. Is it primary home? Is it family home? Investment property? You're looking at your mom and asking? Tell her to join the class and just ask the questions herself. All right, so if it's an investment property, it doesn't matter how long you own it. What matters is that you don't touch the money, because once an investment property, if you cash out, if you sell the property and you cash out, like you take the profits, you're always taxable. Doesn't matter how many years. You got it? Investment properties, you're going to pay taxes no matter what. If you roll over to another property, you defer the taxation. You roll over to another property, you defer the taxation, right? You lose value on the third property as an example. It offsets the taxation. Or if you die before, you sell it again, and boom. Roll over, so defer, die. All right, but investment properties, you will always pay taxes. You can defer them, but you're always liable for taxes. The only way for you not to pay taxes is if it's a primary home. So if you decide it was investment, now I decided to move in, and it becomes a primary home for 2 years at least, then you're exempt up to 250 or 500. Okay? I just said it, Nicole. I just said it. Okay. Oof. So Daphne, I just went over. Sorry, right here. I just went over this right now. Deductions are difficult, and that's why I was trying to get. And I'm sorry you didn't join. You weren't able to join. What I recommend, because this question right here is gonna delay a lot. We took a lot of time in this, so I recommend that you watch that first section. Just go back to the replay on the YouTube, watch that first section, and then ask me questions. I'll address them gladly, okay? Or at the end of this class, I can address it if you want, okay? She's learning how to type faster. I see the fingers going at it. Smoke coming out of those fingers now. Nessa just laughs at my stupidity. I know. The people that work here with me, that they always say, like, are you like this every day? Yep, 24/7. At home, at work, teaching. Yep. Okay, yeah, so just wait until the end of the class and we'll go over it again, okay? Yeah, sometimes. Even I cannot put up with myself for too long. All right. Let's go. So, next thing we have, page 241. So we're back on track. Page 241, we have real estate investment syndicates. Now, we talked about syndicates briefly in chapter 7 when we talked about ownership types. So real estate ownership types, right? And we talked about, if you guys remember, we talked about REITs, REITs. We talked about general partnerships, limited partnerships. We talked about joint ventures. We talked about corporations. We talked about LLCs. Do you guys remember those? Right? So we talked about that. I addressed it earlier. Now, a syndicate could be shaped in many forms, and that's what we have here. And I'm going to go fast because we already addressed this in chapter 7. But a syndicate could be created or molded in different forms. It could be a blend of individuals, or individuals with corporations, or individuals with LLCs, or LLCs and corporations. The fact that it's a syndicate means we join forces, right? And there's a syndicator, right? Which could be you, the realtor, right? So what is happening here is, I want to buy a 100-unit apartment building tomorrow. I don't have the money. If it's by myself, if they do a stress test on my financials, right? Let's call it like that, a stress test, which is a pre-approval on my financials, I'm not able to buy the 100-unit apartment building. But if we guys get together, get on board, and we joint venture, or we create a long-term relationship like a syndicate, right? Maybe together we can use our resources and buy the 100-unit apartment building. Does that make sense? Like the Chrysler building, for instance, is a syndicate. There's different LLCs and corps that own that building. You guys got it? So can we join forces and buy something bigger and better for everybody to profit? That's what a syndicate is. Okay? If it's a joint venture, then a joint venture is something that's not intended to establish a long-term relationship. We're doing this now. We can operate in the same way where we join forces to buy something big, fix it, flip it, done. Our relationship, so our LLC, our venture is over with this particular property. Can we join forces and open up another business right after, buy another property? Sure. But each joint venture is limited to that particular project. Does that make sense? All right. So syndicates could be long-term relationships, but joint ventures are limited relationships. Good? That's the thing to remember for state. Don't get too caught up in trying to understand 100%. Try to remember this. Joint venture, short-term, both of these is organization of 2 or more people or businesses for particular projects. Now, like I said, you could be a syndicator, for instance, but you might have to have a special license to do this. I just addressed this of pulling money together. I also said that syndication could be tenancy in common, joint tenancy, partnership, corporation. So we're just combining different structures that we learned in Chapter 7. Now, you might have to register yourself, with the SEC or Securities and Exchange Commission, and you might also have to have a special license if you are to get involved with these special trades. Okay, because once you register yourself with the SEC, so you'll file a Reg D because now you are handling money for other people, a lot of money for other people, or a certain amount of investors, you fall into this category where you need to have an SEC license or special license to handle SEC stuff. Okay? Next thing. We talk about, again, Chapter 7. This is repeating. I just want to point out something real quick, which is this. You guys need to remember, if you're a limited partner, we're on page 242, if you're a limited partner, you only stand to lose as much as you invest, nothing more. So if you put $10,000 and the business goes down, how much do you have to lose? $10,000. If you put $100,000, how much do you have to lose? $100,000. So that's why traditionally investors, if they're doing things right, they will go to 1,000 people to get to $10,000. Does that make sense? Because if I get all the money I need from one person, that's a big liability, right? If I get from a lot of people, hey, it didn't work out, let's go to this other project where it will work out. So let's spread the money into different projects, right? It's a lot easier to handle than all the money from one source. Another thing to remember, general partners. They are personally liable for the losses. What does that mean? If it's a partnership, that's why I don't recommend at all partnerships, right? The general partner, whether it's in the general partnership or a limited partnership, there's at least one general partner. That one partner is personally responsible for the losses. That means if there's not enough money in the business to pay whatever lawsuit, let's say, right? If there's not enough money, it comes through to me personally. So I might have to sell whatever assets I have, like a house, a car, paintings, right? This happened to somebody that I know. This happened 13 years ago. Happened to somebody that I know. He had to sell even his prized paintings, everything he had, mansion, sold everything to satisfy a big lawsuit, all because he was a limited partnership versus an LLC or a corp. All right, remember, LLCs or corp are a shield, so they protect you. They separate the business from you. They first have to sue the business, and unless you committed fraud or you mishandled monies where it will go straight through to you, unless you've done that, the lawsuit dies with the business. It doesn't come personally to you. You guys got it? So very important to have LLCs or corps. Vanessa, are you calling me a tick? What was that? What is the question? You just wrote tick. Never mind. It was before when I said you could be a tenant in common in the syndication as well? Okay. All right. I don't know. Some of you had a terrible weekend. Some of you are like dragging. Some are yawning. Some are like Sandra just having extra coffee right now. 2 double shot? Got it. Anthony was like yawning. Who else was yawning? I saw a few people yawning before. All right, jumping jacks, everybody. Let's go. Let's wake up. No? All right. So what else we have? REITs, REITs. We talked about this. We talked briefly at REITs. It's the great thing about real estate investment trusts is that they're not registered as an LLC. So they're not registered as partnerships either. So pretty much they're not registered. Why would you own as a REIT? Well, there's a lot of advantages, tax benefits, and mutual funds that are being, just like mutual funds, we all own it at the same time. We're all responsible for it at the same time. And we get all the benefits at the same time, okay? So there's great advantages to using this form of investing. And then when people see it, so for the legal side of it as well, it doesn't mention the legal side here, but for the legal side of it, as a trust, there's a trustee. So because you're not registered anywhere, so I'm just giving you guys, today we have more time for this. Because you're not registered anywhere, the trust owns the building, let's say. But there's a trustee. That means somebody that the trust, so the group of people, appointed to represent the group of people. Almost like a board of directors, but separated from the group of people. See, the board of directors is still part of the company. The trustee is not. Does that make sense, guys? So pretty much the trust owns the building. The trustee is responsible for handling any inquiries about. He or she is not personally liable, but they're responsible for handling inquiries regarding the building. And at this point, nobody knows who owns the building because it's in a trust, not recorded anywhere who the names of these these beneficiaries of the trust are. Okay, so there's great advantage. Vanessa, some hotels could be owned by trusts. There's large luxury communities, so luxury rentals that are owned by a trust. For instance, we have the Avenel. These luxury apartments are owned by a trust. Okay, so you don't know who the beneficiaries of the trust are. We know there's a trust and you know the trustee. So if you ever were to sue them, you're suing the trust and the trustee would answer on their behalf. All right? So it's very similar to an LLC, except an LLC, once you register, you have to say who the members of the LLC are. That's pretty much it. Okay? Now, to be a REIT, and that's the question for the state exam. To be a REIT, you have to have at least 100 investors and at least 75% of the income must come from real estate. So if the question says there's 83 investors, but 100% of the income comes from real estate, this could be an example of all of these except, and they're going to give you 4 options, right? LLC, partnership, corp, and REIT. It could be an example of all of these except REIT. Why? Because it doesn't have at least 100 investors. You guys got it? So key, 100 investors. Questions before I move forward? If the question shows less than 100 investors, then it's not a REIT. Steven, are REITs a good investment? I think the question you should ask is anything a good investment? Is anything a bad investment? It's all a matter of numbers and the intentions of the group. There's great mutual funds. If you ever get into stock market, there's great mutual funds and there's really bad because they're aggressive. So it all depends on what you're trying to do. And they operate similar to mutual funds. So it depends. What is the REIT all about? What is the intention? What's being invested? What's the portfolio? Right? So that's what you need to know. All right, Gary's question coming through. We're waiting. All right, so I'm going to do a roll call as we're waiting. Who do I see? I see Tidy's here. She still wants to hang on. Who else? We got Joe, Andrea outside chilling. Mina Youssef, I see you. Myra, I see you. Daphne, Yamili, Sabrina, Meredith, Sarah. Susanna, I got only on audio. I need video. We have Vanessa, Linda, just laying down, chillaxing. Gary, Catherine, in the dark, only a silhouette. Nina Fozzie, I see you. Crystal, Yanessa, Carlos, 2 times in the day, man. I don't know. Natalie, Geraldine. All right, I already said Sarah, Talia, Brian, Peter. Where's Peter? Peter, come back. Gil, I see you. Sandra, Nicole, Jane, Stephen, Anthony, Lena, Perla's out, Heather, and Chad. All right. Oh, David Gonzalez is with us. All right, cool. Now the crew is complete. Everybody's here. All right, so what was the question? Let's go here. So the question was, even at 100% of trust income and shy of 1 investor, it's still not considered a REIT. Nope. If it doesn't have 100 investors at least, it's not a REIT. Okay? No matter what. 100% of the income could be from real estate, but if you don't have 100 investors, no, it's not considered a REIT. Andrea starts at 5:30, ends at 9-ish, depending on who stays until later and who asks questions, but 9-ish. Okay. And Tidy right here. Yes, I have my state exam soon, so I need to squeeze your knowledge. So guys, go ahead. Congratulations to Tidy. She passed the school test I said before on Saturday. She just passed, ready to rock and roll. Again, no pressure for Emily, no pressure for Perla, no pressure for Rhea or for Meredith. No pressure at all. She's doing the same thing like Sarah, like a few others. Jonathan, if you guys remember, you gotta listen. Keep on coming until you have your state exam. I got no problem with that. As long as we have a class going, join. I have no problem with that. Sarah is gonna write, I just like to listen to your jokes. Is that what? Okay, 4 times the charm. That's it. I thought she was gonna say I love the jokes. All right, let's go back to no. I see how it is. All right. All right. Any other questions regarding REITs? No? Okay. So, business opportunity sales. I got questions before we start. Business opportunity sales. Our license is a real estate salesperson license, correct? A real estate salesperson. Does it say real estate and business? salesperson? Does our license say real estate and business? Or it says real estate salesperson only? Let me know in the chat. Our license, what kind of license do we get? Anybody? What kind of license do we get? Mina says no business. Gil says sales, Steven, real estate, salesperson. Daphne, we'll get there. That's it, real estate, real estate, real estate. So it doesn't say business, does it? Okay? So if it doesn't say business, can we get involved? I was about to say, Vanessa, what happened there? You're yelling? Person. All right. So our license is real estate salesperson. So can we get involved in the sale of a business, a restaurant, for instance? Can we get involved in the sale of a retail store, a school maybe? Can we get involved in that? The answer is very simple. Because every business, or the majority of the businesses, involve some type of real estate. That's what allows us to step in to this realm, to the business sale. Okay? Because now we're selling real estate with it. Whether it's the transfer of a lease, pay attention guys, whether it's the transfer of a lease or the sale or transfer of a deed, right? We can participate. That's what enables us to now charge 10% commission, 15% commission, 20% commission, because we're selling the real estate and a business. You guys got it? Some realtors, that's their niche. That's what they specialize in. It's a little bit more difficult to figure out values, because now you have to look at inventory. You have to look at licenses that they have. We have to look at the profit and loss of the business, stuff like that. Right? So it becomes a little bit more difficult than a traditional sale, and sometimes it takes longer than a traditional sale. So businesses are tough, but we can charge more money because of that. Just like commercial real estate. We don't charge 6% to sell a commercial building. We can charge 10, 20% if we want, 50% if you want, right? And with no shame, I can literally say, hey, 15% is my commission, and I'm not negotiating this, right? You can literally do that. But if it's residential, remember, negotiable. You have to allow the seller to negotiate. Businesses, you can charge whatever you want. You can do whatever you want. It's almost like ethics is out the door, right? Always comply with ethics. But what I'm saying is the consumer is a business. So businesses are a different story. B2B is a totally different story, okay? So, again, as long as real estate is involved, we can participate. But who sells? Just like everything else, the broker sells. You got it? So you need to have a broker's license. Can we participate? Absolutely. Do we prepare the contracts? No. We prepare letters of intent. And then the attorneys prepare the contracts. Okay? Now, I was telling you that there's way more when it comes to selling a business. There's way more things attached to it. So besides the real estate or the present lease, they might also be selling fixtures and stock and inventory, the business name, customer lists, goodwill, and special rights such as copyrights, patents, franchises, and licenses. All right? These two right here, so the business name and customer list are actually the most important to you, nothing else, because you can have a bunch of stock or fixtures. Like if you come here to the school, what's the stock? Books. What are the fixtures? Right? The TVs, projectors if we have chairs as well, we have tables. These are great, but is it really what makes the business go? No. It's the customer list. It's the business name that already exists for a long time, for instance. Does that make sense? So you always have to ask, is the business name included in this value? Are the customer lists included in this value? How many people, especially salons, like I'm gonna tell you guys right now, like a beauty salon or a barber shop or whatever, how many times those are sold as a spot. But then you move to the next salon that you just purchased, and you call all your clients and say, hey, I just moved over there. So pretty much the buyer bought a beauty salon with no clients. So you have to start everything from the beginning. That's bad. Guys, you need to ask what's included. So unless the buyer already has a lot of clients, that type of business is doomed to fail quick. And we are the advisors. You need to know these things. Business name. Why does this business exist? Is it like McDonald's? Let's say McDonald's right now. You purchase a McDonald's spot, you change the name. For those that are McDonald's lovers and now they see that the name changed, will they stop there or will they look for another McDonald's? Right? These are things to think about. Obviously, I'm talking about fast food, but if you go to a higher class type of restaurant, right, the scenario is the same. It's the spot that you're used to going. Name changes, people don't go there anymore. We are creatures of habit. That's why I'll say in every single class. Business name is one of the most important things. And there's people that buy, let's say you buy this school right now. There's people that buy this school and say, hey, new direction. No, let's change this to the next direction because I want it to be different. Because I want it, look, if it's working, if it's successful, why would you change the name? It's established. Does that make sense? Just say new management as an example. By the way, my business partner just said not for sale in case somebody's inquiring. All right. So the idea is if it's profitable the way it is, why would you change the name? Got it? Creatures of habit. People stop going at places just because they change the name. If it isn't broke, don't fix it. That's right. Oh, initially you said if it is broke. I just saw that. Daphne, what happens if the seller doesn't want the new owner to use their name? Then they don't sell the business name. It's not included in the price. That's it. So I'm moving. Let's say I sell you the school, but I'm moving new direction to a different location. What do you get? You get a lease for a spot where you can open your own school, and good luck with everything else. Does that make sense? Perla says, if the name is trademark, you can't use it, I thought. Well, if it's trademarked, and trademarked by whom? That's the question. Okay? And even with trademarks, what line of business is it? For instance, it just happened a few years ago, like I think roughly 10 years ago, that we're next to Prudential Center, okay? And roughly 10 years ago, a Cairo opened up right across the street, opened up Prudential Cairo. Now, Prudential doesn't have a trademark on Prudential, but because Prudential is a bully, right? What did they do? They sent a letter to the Cairo that says, hey, you cannot use Prudential name. So the Cairo, being smaller, way smaller financially than Prudential, decided to, you know what, I don't want the headaches, let's change. And they became, at the time I think it was All Care. That's what it changed to. You guys understand? So trademarks depends, Perla, depends what the trademark is and depends what it is for. There's different ways to register the trademark. And also you need to know, is it registered internationally? Is it registered statewide? Or is it registered nationwide? Worldwide? Universally? I don't know. But how did you register the trademark? That's always important. All right. Perla, before I move forward, I see are you typing? Okay. Don't forget, always put question marks so I know you're going at it. While you're typing, I typed him. All right, she says, hold on. I used to work at a diner, chit chat, then all of a sudden we started getting customers asking when we were going to open down the shore. Turned out someone was opening a diner, naming it Sit and Chat. And what happened? I like this name, by the way. Sit and Chat. That is awesome. My boss was sued. Apparently they had the name Chit Chat and Chat Shit. All right. And what happened? Because Sit and Chat is nowhere close to. Yeah, I don't want it. I was thinking about it. That's why I stopped for a second. Oh, they had Sit and Chat as well. Okay, trademark. So you want to screw somebody's business? Figure out if it's trademarked. That's all. Figure out if it's trademarked. Go ahead, register the trademark, and boom. Now you can stop them from using the name. Isn't that crazy? Who trademarked Chat Shit? Even Chad is like laughing. Heather even had to get off camera. Chat Shit. That's awesome. They should have trademarked as well that shit. This one, like from Chit. Imagine. Anything that sounds remote. Absolutely, that's the way you do it. If you got money, buy all the domain names as well. All right, so we're all adults. Don't sue me. Ready? But I'm giving you a YouTube thing for you guys to watch later and laugh about it. This guy is amazing. Okay? So you can... Really, Steven? So just have fun with this video. Watch it later. Alright, so let's go back to this and drop the chat. And we're gonna go to the chat. So... Steven got his haircut. All right, so everything that we talked about up here, so we talked about fixture, stock, business name, customer list, and so on. This is all personal property. If you guys remember, personal property is transferred with a different type of document, right? So deed is for transfer of real property. Which document do we use to transfer personal property? Which document do we use to transfer personal property? Bill of sale, Stephen, nope. Bill of sale, there you go. Keep on going, bill of sale, yep. So bill of sale or receipt as we call it nowadays. So bill of sale, so anything that's $500 or more must be evidenced by a written contract, and at closing, no, not bill of sale. And at closing, a separate bill of sale must be executed for all chattel, stock, materials, and personal property that is included in the sale. Okay? So there's deed for transfer of real property, and then there's bill of sale, B-I-L-L, not Gil, B-I-L-L, for transfer of personal property. You guys got to remember this. We talked about in chapter 5 when we talked about what was real estate and the difference between real property and personal property. So yeah, Gil, chattels, cattles, movable, absolutely. Heather, if you're selling Gil, I don't know if you want a receipt. Right? You just own it, period. You own Gil, that's it. Oh, I didn't say it in the bad way, because receipts are usable for you to be able to return. That's what I'm trying to say, Gil. It was in the good way. All right? It's non-refundable, non-returnable. Deal with it. DJ, you know, so you get the best time of your life. There you go. You got DJ and everything. Party all the time. Mina, disclosure. Are you trying to disclose this, or what are you disclosing? I'm sorry. Got lost for a second. Disclosure. Everything is about disclosure. Absolutely. Oh yeah. So anything over 500, I guess that's what you're trying to say. Okay. Anything over $500 must be disclosed through a written contract. Yep. All right. The thing that's most complicated about having a business sold, ready? Trying to get the owner of the business to give you as much information about the business as possible, including profit and loss, so accounting statements, and also tax returns. Try to get the seller of the business to say, hey, here's my tax returns, here's my P&L for the last 3 months, 6 months, 1 year, whatever. As a buyer, I want to see the last 2 years of the business, and I want to see it quarterly or seasonally, depending on the type of business. Does that make sense? But sellers of business, most of the times, they don't want to show you anything. Why? Because they're declaring cash. They're declaring, for instance, restaurants, they're declaring cash. So the lowest possible that they can declare, they will. And then they tell you, no, but that's not what the business does. That's why I don't want to show you those amounts. The business does way more than that. For a restaurant, it's easy. Let me see your numbers. If it says 100,000, I know it's almost $500,000, right? It's easy because you bury as much as you can. So it's actually a good thing to show tax returns. All right? Other questions to ask is, are fixtures and equipment owned, and what is their fair market value? Are fixtures and equipment leased, and what are the terms of lease, and can it be assigned? Is the inventory as accurate as possible? Because a lot of people don't even know what they have, right? What liabilities will be taken over by the buyer? We're going to talk about that in a second. And how much will the accounts receivable, that means money owed to the business, be discounted for non-collectible debts? So there's a lot of questions you got to ask when it comes to a business, because you want to make sure everything's being transferred in the business. Okay, on page 243, we have Uniform Commercial Code, UCC, Uniform Commercial Code, UCC, all right? So what is the UCC, and why do we need to pay attention to this? Because the UCC regulates the transfer of personal property. It's not deeds, it's personal property, so bill of sale, right? And the section of this code that is most applicable to the real estate business is Article 6, known as the Bulk Transfer Act. Bulk Transfer Act. You need to remember this. Article 6, or Bulk Transfer Act. Bulk Transfer Act. Now, why do we need to know about Bulk Transfer Act? In most businesses, supplies, goods, and services are constantly being purchased on credit and paid for as suppliers submit their bills. So you're buying something and you get it net 30. What does that mean? Pay 30 days later. Net 60, next 90, 120. Bless you, Talia. And you get it days later, or months later, or even a year later, depending on the type of creditor that you have or supplier that you have, right? So the Bulk Transfer Act is designed to actually protect the creditors people that you owe money to, suppliers, right? Protect them from a business owner that sells the business and then disappears. You got it? This happens a lot. People just sell the business and leave it unpaid. The bill's unpaid. Well, guess what? If everything was done properly, creditors cannot demand payment from the new owner unless you can prove that the new owner had knowledge of the fraud. The new owner knew that the previous owner owed money to somebody, The previous owner owed money to somebody and did not pay. So if the new owner is not aware of this, then is he or she liable for the unpaid bills? Most likely not. So how do we prevent fraud? Article 6 requires that following steps be taken when the business is sold. Purchaser should require the seller to prepare a list of existing creditors, including their names, business address, and amounts owed to each. So we're going to skip all these bullet points. So you have to have a list of everything that's owed, and it must be accurate. You must include all the names. See, the seller right here is obligated to prepare the list of creditors and is responsible for its completeness and truthfulness. Why? Very simple. Because it is against the law to make false statements on such a list. It's against the law to lie regardless, right? But here it says it's against the law to make false statements because it's a business transaction. Being a business transaction, anything you declare in the business, it's a representation. And guys, remember from chapter 3, we talked about intentional misrepresentation. It's called fraud. There was unintentional, and then there's honest misrepresentation, right? You guys remember those three? If it's intentional, it's jail time. Okay? So after receiving this list, a purchaser, so the buyer of the business, is now obligated, so if you're buying a business, you're now obligated to contact all listed creditors and say, hey, creditor, I'm going to be the new owner. The old owner says, I will owe you $600. Is that correct? Does that make sense? So we get the list, we contact every single one of them, in writing of course, contact every single one of them and say, hey, this is the balance that I got. Is there anything incorrect about this statement? Okay? And you have to do this at least 10 days before the sale takes place. So as a purchaser, up to 10 days before the sale, you must contact all creditors. Okay? Now let's say you did contact the creditors and the amounts were incorrect, whatever. Ready? There's a statute of limitation of 6 months on bulk transfers. What does that mean? I purchased the business. 6 months later, nobody came to claim a different bill than the one I said before, right? So if I told you, hey, Anthony, I owe you $50. Is that correct? And if he says something, we'll adjust. But if he doesn't say that I actually owe him $500, not $50, it's $500, there's a zero missing, right? So maybe somebody did something wrong. If he doesn't say anything, after 6 months, he's SOL, statute out of limitation. That means he cannot sue me anymore. You got it? Unless, of course, the transfer has been concealed. So if nobody knows about this transfer, right, then the creditor, so Anthony in this case, can still sue me. If I never notified him of the sale, he can still sue me as if I was the original owner. Right here. You guys got it? Questions? Hey, Anthony, the $50 is fictitious, is only for presentation purposes. All right? Just saying. Because I claimed live I owe you, so I just want to make sure you understand. This is the disclosure that Mina was talking about before. You should have been faster in claiming it, man. All right, let's see. Mina, what if you don't get an answer back? Then that's it. That's what I told you. Mina, you got 6 months, right? If they don't show up within 6 months, can't do anything. They don't have to answer. They only have to answer if something is incorrect or, right, if they intend to collect the monies in a different way. So sometimes, for instance, you might be net 30, but they might say, hey, you're a new owner, we don't have a relationship, so I need the money now, right? So that's what they might say. I'm telling you, not one day without a siren. Unbelievable. People in other cities must be like, some of you, right? Must be like, what kind of town do you live in? Always, always sirens. It was morning, it's evening. Why does the purchaser, so Daphne, why does the purchaser do the contacting and not the seller? So it's to give an opportunity, guys. As a buyer, pretty much this law is to give me an opportunity to negotiate an extension of the terms, right? Or negotiate, hey, I'll pay you now if you give a discount. So it gives the buyer an opportunity to take over the business and negotiate these things. There's a reason why the seller is selling. They don't have money. But I will only buy if you discount the amount of money I owe you. You guys got it? All right. Now, the requirements of the Bulk Transfer Act are designed to protect the interests of the buyer as well as those of the seller's creditors in the sale of a business. Non-compliance with this law is a criminal offense in New Jersey. If the seller lies or if the buyer never contacts the creditors, this is a criminal offense. The other thing I want to point out is this. And again, some of these stuff is not for state exam. What I'm going to say right now, it might be state exam, but it's more like in real life. When you're dealing with investors, right? When you're dealing with investors, look, real estate is not covered. Only business, personal property. Okay? Why is this important to know? Because if I'm selling the building, for instance, if I'm selling the building, it's under an LLC, right? If I'm selling the building, then it's not covered. If I'm selling the real estate school and the chairs and the tables and business personal property, now the business personal property is covered, the real estate is not. You got it? So real estate is not covered. Why am I talking about investors? Because if I buy a property, I'm going to put it under an LLC. When I sell the property, I'm selling the real estate. I'm not selling the business. Does that make sense? I'm selling the real estate. Real estate does not fall under the Bulk Transfer Act. Why is this so important? Because under the Bulk Transfer Act, when he's selling something like this, as soon as they see LLC, automatically triggers Bulk Transfer Act. As soon as they see Corp, automatically triggers Bulk Transfer Act. And therefore, title company is going to request, and attorneys are going to request, a deposit in escrow for bulk transfer taxes. So automatically, you fall under this category until you explain or have your CPA prepare a letter. This is why CPAs are so powerful, okay, for investments. Your CPA is going to prepare a letter that says, the only thing being sold in this transaction is real estate, not business personal property. Therefore, my client does not fall under the obligations of the Bulk Transfer Act. Boom. This is sent to the state, and this is sent to the attorneys and title company in the transaction. Therefore, you don't have to put any money in escrow. Why is this important again? Because the bulk transfer tax for me a few years ago was $23,000 before we even closed. I had to have that money in escrow, $23,000. What if I didn't have that money? What if I'm selling because I need to sell? What was I going to do? All right. Luckily, we had the money at the time and we were able to put the $23,000 for the escrow. But a few years later, I got a very good CPA that told me, why are you doing that? Real estate is not covered. The only thing you're selling is the real estate. You're not selling the business, right? Real estate is real property. real estate is not personal property. Are you guys understanding this? Real estate consultants. You are real estate consultants. Make sure you help real estate investors, buyers, sellers understand these things. Have them talk to a CPA, certified public accountant, that handles real estate, which is a big difference as well. Okay? Let's see. Daphne, why do deals die when bulk transfer doesn't apply to real estate and only business per? Why do the deals die? I'm sorry, I'm lost in that question. Let me skip. Rephrase the question, please. Oh, I mentioned that in the video. Okay, so if I mentioned the video was based on what I told you, the $23,000, because they forced the bulk transfer act. And like I said, if I didn't have that money, would I be able to close? Would I be able to move forward? So if that's what I mentioned, then it's exactly what I was just explaining a few minutes ago. All right? So it's the fact that people have to have an extra amount of cash set aside just in case. But now I have a good CPA, as I was saying, that will tell them it's not personal property, it's just real property. Therefore, UCC and the Bulk Transfer Act do not apply. Okay? Yanessa, is there a percentage that is required to be in escrow before the exact amount is confirmed if required? No. They'll figure out how much the sale is, so whatever you're selling the property for, and automatically calculate how much the bulk transfer tax is. So again, if it's a business that's being sold, yes, it applies. And again, CPAs will tell you that. If it's real property that's being sold under a business name, then it doesn't apply. And that's the deal breaker right there. If you guys don't know this, now you know. Okay? I'll play some Biggie later. Okay? All right. Any other questions? Oh, Luis Sanchez. Thank you for explaining this. You're welcome. I hope it was good. All right. Do you guys have any other questions regarding this chapter? No? All right. Daphne, question coming through. We can always depend on Daphne to ask questions. Louise is watching from YouTube. If you have any questions, drop them in the chat. We're about to go on break and start a brand new YouTube session. So just to let you know, I will close this one and then open another one right after. So if you're subscribed or if you're watching right now, it'll tell you when it starts. I'll address that. Let me address that later. Okay? Any other questions? Nope. All right, guys. So we're gonna go on the break. It's 7:27. Let's come back 7:35. All right, 7:35. We're back, guys. See you in a bit.